know a lot of people really enjoy his commentary. I certainly do not, but it's nice to have him on anyways. I'm just kidding. We love Ivan. Anyways, guys, we've got Chris Pulver coming next. You guys know him and love him as well. He'll be jumping on the show here in just a moment. Real quick, we're going to just take a short break, and then we'll be right back after this. Check it out. All right, we're back. Chris, how's it going, man? Love
What's
the
up,
shirt,
Nick?
by the way.
Thanks, man.
That's a great shirt.
Yeah.
Chris, the market got what it wanted, and then the market sold off. What?
Are you surprised?
No, at this point, no. But I was making the point, and I want to get your take on it too. But I'll just share my thoughts on this. I think the market bought the rumor that the CPI report was going to be good,
Yeah.
and it had limited upside clearly because the number did pop the market, but the upside quickly erased itself. It just kind of came back flat. I think we might have just been in a state where we melted up into this report, and CPI was always going to kind of give you limited upside. I mean, obviously we're speaking with hindsight, so I can say that now, but I mean, is this market just, the standards just so high for it right now that it just doesn't even care that a good CPI print comes in?
Well, I think it was kind of front running the CPI as is. I mean, we saw some forecasts coming out last week, and everyone was looking for the improvement of CPI data. Baidu, I want to come back to in just a moment here, but a couple of things on the higher time frame. So, I've been watching all week to see if I have some big gamma levels to play. This is starting to fill up here at 565 a little bit. This might not be a bad. I mean, well, I want to see what it costs me, but if I did a 565 for, let's say, Friday tomorrow, let me see what that looks like right now. I've got some calls I'm trying to roll. Baidu is ripping to the upside in a good way. I own the shares around $90, and I'm uncovered in my personal account, and I've got clients that are covered up to 110. I'm looking to roll those out. I'm going to roll those out and up and try to get as much out of Baidu and Bob as I can. If those stocks are cooperating, I think there's a lot of good upside in those. Let me go to July 12th.
So you're going right now on the China side. I mean, China's just to give some context here. You got BABA up 3%, Baidu up. So market's clearly ripping. Oh my goodness, Baidu's up 6% today. Okay.
I know. And look at the. Did you look at the Russell?
Yes.
Look at the Russell.
Yes.
Okay. That's the one. It's one index. It's one index. It's like, what have we been talking about? This potential small cap rate cut catch up trade. And I don't mean that on your fries. I mean catch up as in the IWM has 20+% to hit all time highs. And if this is going to be the trade where the market's finally like, look, 81% probability now the Fed watch tool is showing the rate cut in September. Small cap could be the big beneficiary. You and I have talked about it. Nick, Frank, and I've talked about it. This could be that consumer beneficiary cut, right?
Well,
good for small caps, good for small business, good for interest rates, good for housing. Like this is a good thing. Whether the market responds positively to price, we don't know yet, but I think this is still what's been anticipated.
Well, the thing is, Chris, I gotta point out where I was at yesterday, because it clearly has not been the only thing not yesterday. A couple of days ago, I mentioned that my only exposure to the markets on a trading basis right now is XLK. Yep. So I am only long technology, which ended up being fine. It's still, my perspective has been this: if the market's going to rally, tech needs to participate, and if the market's going to broaden out, tech still needs to participate, in my opinion. But it's also the one that's like the safe trade that's been working. But today, I'm happy to see, although I am only in technology, I don't have any IWM, I'm very happy to see the Russell participating. I'm happy to see this inflation report to the rate sensitive parts of the market was good news. 3% for the Russell. I want to see it 3% a day for a month straight now. That would be remarkable, because then it would say, okay, we may have dodged. It's possible, Chris. This is the question today. I think that is so important. Are we going to dodge or not the rate cut problem that we've talked about in the past? Like if they wait too long and inflation stays stubborn, we could see the inflation hurt the consumer so bad that we enter an economy slowdown into a recession. But Is it possible that we thread the needle here, Chris? I mean, is it possible, or is this going to lead to a melt up that ultimately leads to? I don't know.
Yeah.
It's tricky. I've got long gold, long tech. So if you actually looked at what I'm doing, I don't know, right? Because I'm long the scared part, but I'm
Yeah.
long the risk part. And I'm just saying I think rate cuts are coming. I like both those areas. So I'm
Yeah.
not sure.
Well, so one thing I will say, so it's taken a lot to be like, I'm kind of confident we're about to have a pause with this rally, and here's my justification.
Okay.
So if we look at our low from April, we'll change the color here. If we look at our low from April, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have 12 candles to the upside. That's not any special number, but if I go back to some of these bigger rips that we've seen, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. That's a big stretch that came out of all this like this was the September effect 2022 rip. That was the broader market rip in 2023. If we go back to COVID, okay, which maybe you want to call it an outlier, but even from this COVID crash, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. We paused after like 12 to 13 weeks. So I think as we're sitting here at all-time highs, and also this indicator is also pretty solid. It's just a heavy, like you take out a high, here's likely to drift. You take out a low, here's likely to drift. We did have a reaction to that resistance right in April. And then of course we've looked, on just, if you bought the dip in April, awesome. But I'm looking at this, it is stretched. And so I took a chance yesterday. I shared this trade with Frank in my trading room. I am looking at a sell position out to the end of the month to see if this market just stalls or pauses for a week. That's really all I'm looking for.
When you say sell position, are you talking about playing options, or are you just talking about a short?
Options, of course, dude.
I know you never short. I don't blame you. That's the toughest trade in the book.
Yeah. So here's the trade. So my level is 57.50. That's the SPX,
Okay.
and so the trade looks like this. So I'm getting $1.15 on the trade. So I'm getting credit. So if price just stays where it is, I get $1.15. If price goes down, I get $1.15. Price goes down a lot, I get $1.15. If price slowly continues its melt up into my trap area, 57.50 is a 10x profit. Now beyond 57.50, I can get to 57.55 before my risk starts to accrue.
So Chris,
yep.
Let me stop you for a second. We've got 600 people in here, and options are, something that many people are interested in learning more about. If you just hit undo on your drawing for a second and bring that back up, because you had the bring that. So explain to us, like we're 7 years old, what this drawing is showing, because I know and but what are we talking about here with that skew to the downside, right? You've got risk to the upside with that drawing. Break it down like we're in a beginner's class.
Okay. So first, if you're 7, I'm going to make sure you have like a popsicle. Let's walk through this trade.
Popsicle in hand. I'm
ready. Faces and gold stars on it for you.
Yeah.
So the trade is this. It's called a broken wing butterfly. That's the fancy name for it. What this is basically you're taking a bias. You're getting paid, so it's a sell option trade, which is what most professional traders do. Is you're selling options, you're selling premium. So here's the way the trade works. We're currently sitting here. Let me change this to the SPX. This will be a little bit easier since that's the instrument that I'm trading. We're trading at 5637. Okay. So we're at 5637, and the price point that I'm looking for is 5750. Okay, now that is my trap price. So I'm basically saying, you know what? If price wants to push there, bring it. Like bring it to me. And again, there's mechanics to this trade, but the way this trade works is I am selling a 5750 call. So I have 2 contracts. And I'm selling the 5750 call. Okay. Yep. All right. The next one that I'm doing, in order to create a spread out of this, I have to go below price. So if this is the one that I'm selling, I'm going below this at 5740, and I'm buying a call and then I'm going above it, and I'm going to 57.70.
Yep.
Now, if you did the numbers on that, this one is 10 points different, and this one is 20 points different. So the reason it's called a broken wing butterfly is because it's not symmetrical. And so I'm taking on a little bit more risk to the upside in case price blows through my trap price. So the way this works, and one thing that's really easy about options is anytime you take an options trade, you get this risk analysis graph to show you based on where price is at, here's your current position, here's where your profit zones are, here's your risk is. And so the trade looks like this, and I'll kind of color code this as well, since we're talking to 7-year-olds. Here's price. Okay, price is right here. My chart is going to look like this.
And this is your scenarios in which you're making or losing money, right? So,
correct. Yep.
So for new, yeah.
So my trade is profitable.
Yep.
All the way in here. So all of this is profitable. All of this is profitable. And then this is where it would turn risk for me. Okay. And what this looks like is because I took the trade for $1.15 credit, as long as price stays where it is or goes up slightly, it can come all the way up to 57.50, which is going to be right around here.
Yep.
Actually, no, sorry, 57.50 is right here. We come into this area, then I can be profitable if price stays exactly where it is, goes up slightly, goes down slightly, goes down a ton. So that is my $1.15. That's my highest probability trade. This trade is about an 85 to 90% probability. Okay. Yep. So that's what I expect to get out of the trade. Now, if this market is going to go up a little bit higher and try to test my levels, this is actually a profit trap for me that could pay me, 8x return, 9x return, 10x return if by expiration, and my expiration on this trade is July 26th. So I'm not going all the way out to the end of the month. I'm looking to see this week's going to be the 12th, then we have the 19th, and then we have the 26th. Yeah. So the 26th is 2 Fridays from tomorrow. So what I anticipate is I'm just going to make the $1.15. That's really the trade that I'm planning on. I did this, if anybody's familiar with, how the probabilities work in options, this is a 12 delta trade, which gives me about an 88% probability that this trade works in my favor. Okay. Now, if it tests the highs and tests that 57.50, which means it would threaten my position, that's why I'm positioning this with that type of profit trap. Now, the truth is on that profit trap, if we get there quickly, Nick, if like right now price just blows up and we're getting to 5,700, 5,725 by next week, my trade is going to look a little bit rough. But if we are inching up like we did this week, where it's like a little bit of high,
slow move higher,
a little bit of high, a little bit of high, this trade would start to get more and more profitable as price were to threaten my 57.50. So I'm kind of, in a way, I kind of want it to get up that high, but at the same time, I don't. Does that make sense? Like that's off of this.
You're okay with some upside, but you don't want it to blow higher.
Exactly.
Yeah,
exactly. So, I mean, so the reason I like the trade is this is a lot different than just saying I'm going to be bearish. Here's a bear call spread, because if you do that right now, you're going to collect maybe 20 cents on the dollar. Well, if I do this trade, I'm giving myself that 10x lottery pick or the trap, where if I'm right on this trade, I expect to make $1.15 and I walk away happy. If I'm right on this trade because price is, doing its thing and steadily melting up a little bit more and it gets into my trap zone, that trap zone, it would have to be hit with an outlier. The probability is, again, this is, I don't want this to sound complicated. I'm not trying to talk over anybody here. I know options can seem like a crazy learning curve, but I promise anybody out there, if you did a crash course with me in options, I could have you learn options within a month. Like,
well, the thing is, Chris,
those basic strategies, and I've got
one of the powerful things about options is the name says it all. Options are just tools. They're just, if you have a perspective on the market where you think, oh, we're going to go sideways, or, oh, we're going to move slightly higher, I'd be okay with some slightly, like, you can basically just say, here's what I think is most likely to occur in the market. Here's where I'd be okay with taking a risk. And options just gives you the optionality to just go ahead and set up trades in the direction that you like. So I do also want to ask you about something, Chris. We've got metals finally making their surge here. I wanted to ask your thoughts on it because we've got gold and silver jumping today. Meanwhile, there's so many interesting charts today. You got the Nasdaq down 0.8%, so that's interesting. But you have the RSP, the equal weighted ETF, having a remarkable day. You've got Russell having a remarkable day, and you've got metals having a remarkable day. It's an interesting story being told today. Perhaps, I don't want to say it too soon because I've been wrong on this 17 times in a row. Are we seeing some broadening?
Well, again, you're seeing the underperformance catch-up trade, and maybe the biggest detriment to these underperformers has been the high interest rate environment. So this really is this potential shift of, and not that like an Apple or Google or Amazon or Meta, Netflix, not like the Mag 7s or the Fab 3s, not like they can't continue to perform well, but this high concentration is going to force where is value elsewhere. And value is sitting in 490 stocks that have been underperforming. Like Nick, we're up 17% for the year, and the Mag 7, the Mag 7 or the Mag 4, whatever you want to call it, it has been responsible for about 13+% of the 17% net. That's insane. That's how like ridiculously narrow this market's been. And you and I've talked about this. The Dow has been lagging, right? The Dow's up 4% compared to 17 and 25% for the S&P and the Nasdaq. The Russell has been up 1% for the year. Today alone, the Russell's up 2+% just for today. And again, I'm hoping that this is a bit of a catch-up trade for equal weighted. So if you go QQQ, is this doing the same thing? So QQQ is up, right? So equal weighted Nasdaq is up, and then you go RSP for S&P is also up, and then you look at the SPY, it's flat, right? The Q is flat. Like, so equal weighted means you have all of these underperforming stocks that are now given a chance to show, hey, look, at this rate cut thing is happening. Inflation's trending lower. Rate cuts are happening. This gives them a chance to get back out there, maybe borrow again.
And look at this, Chris. Just to your point about the divergence in this market. Look at that heat map. All the big names, red. Everything else, green.
Look at yesterday. So camera 1, camera 2. This is right now, correct?
Yep.
Okay. Now flip back to my screen. This was yesterday's close. This was yesterday's close.
Yep.
Broad market, but like, who are the top performers? The same as always. NVIDIA, Amazon, Google, Microsoft, all the big names. Everything was pretty green. But the fact that, go back to Nick's screen, it's amazing to see this. It's amazing to see that. Is this profit take? I mean, Tesla's still up today. Congratulations. Tesla's now like the greatest stock in the world.
Yeah, right.
But everything else showing green. And it's going to be interesting. Tomorrow we have earnings on the financial side. So we have, let me see, I've got a screenshot here.
Yep, thanks. Tomorrow, JP Morgan.
Who are our earnings players for Friday?
JP Morgan, I'm pretty sure.
Okay, I posted, let me see my Discord here. I posted it on Monday or Sunday night.
JP Morgan, Wells Fargo, Citigroup.
Yes, all the big ones.
Big names, yeah.
Yep. Okay, so yeah, JPM, WFC, C, and BK is what I showed, just some notables. We only have 29 stocks reporting this week, so that's 3-4 big investment banks. That'll be interesting. Their guidance will be meaningful. If they, what's going to be interesting to read, like in their earnings transcripts, will be if this current CPI data, if this inflation news, if they're updating their final comments for tomorrow's earnings calls, that seeing rate cuts and seeing the trend of inflation, seeing the way that the Fed is possibly leaning, that they're more optimistic for increase in borrowing and increase in, who knows? There could be some optimism baked in there, which would kind of contribute to what we're talking about right now, which is a catch-up trade for the underperforming.
Yep, and you're seeing in the sectors too. You got basic materials, real estate up, utilities up. Yeah, there's tech down on the day, semis down. There's the divergence as well. You're seeing other things participate today. So, I think it could be profit taking, like you've said, Chris. Might be taken out of the big ones and put it in other places now that we officially, I would say, with this inflation number, that's a 3-month rolling average of better than expected CPI prints, PCE, PPI.
Yeah.
Things are lining up for that rate cut story to come into play. Will it go off a cliff at some point? Maybe, but as you and I have both said many times, the party can get loudest right before it comes, before it ends, you know?
That's true.
So,
Very
yeah.
true. While we're talking about this, I want to mention Baidu. This has made a comeback in a big way. I am out of the way on this one for my personal account, but I'm in on this with some ownership. I did a ratio spread on this. I own the shares around $96, and I'm now looking to roll up and out. So I had a 110 covered call, which is fine, but at the pace, the pace this thing is ripping right now. We went for maybe the last week of trading, we went from 85 to 101. If there's going to be any follow through here, and I'll stick to just simply technicals. I know that if you see, China's uninvestable and you never know what's going to happen and they could pull the plug and they can delist this, maybe. But I'm still trading options on China stocks. And it's not everything. It's Baidu, it's Baba, which are cash cows in their tech. And I'm also in like KWeb and FXI. So I've got about 4 plays in China right now. And I'm looking at this. I mean, the technicals are looking pretty solid. If this was a falling wedge, I thought we had a legitimate breakout right there. And if we came back in to test this low and is divergent, what I'm looking for here, Nick, is if we can come back up into this high, I'm going to get pretty aggressive on this continuing up like we did here. So I'm looking for symmetry. We're just off these lows. If I can get Baidu back to 150, 160, I will be thrilled on some profits. But what I'm trying to do right now is I'm covered at 110, is I'm going out and up. So I can go out in time and up in price, and I can still do that for a credit, which helps me lower my cost basis. So I own the shares around 96. I just rolled out farther and I lowered my cost basis by about $1.95 or so, maybe $2. So now my cost basis goes to about $94, and I'm covered up to like 125 or 130. So I'm giving myself some room to the upside. If that gets threatened, I will try to roll it again. But if not, I'll take about $35 to $40 of profit per share, which is not too shabby. So I'm trying to give myself some room if this trade is going to go. If we're starting to see, and this is a weird thing too, we can sit here and talk about the U.S. benefit of this, like the IWM benefits and small cap and the catch-up trade. But I also wonder if non-U.S. benefits.
Sure, maybe some global stuff as well.
Yeah. What did Ivan chat about with the Japanese yen this morning? What was his commentary?
We were looking at the yen, and we were talking about how the predominant uptrend is still up, but if you do actually see the dollar kind of continue to really trend lower, the yen might be a bit of a maybe another option. I think the path of least resistance as you hit the support is still up to for now. But if you really see a shift where we break support, where we really start seeing a continuous fall off, I think that's the thing with the yen. Everybody is seeing these dips and they're just saying, oh, they just get bought right back until it changes. So maybe we have that change in front of us, but we'll see. I think the yen really benefiting from a weaker dollar because they're talking about potentially rate hikes at some point. And now the Fed, I would say today, is pretty decisively likely to cut rates this year. So should be interesting.
I had a trading room session earlier this morning, and we kind of played catch up on the yen crosses because the timing of this was ridiculous, right? Like you have CPI print for the US in that same 5-minute window, you had a 200 pip candle. I think I posted a message in Discord. It's like,
yep, I saw that.
And so it does smell a little suspicious. There could be some heavy amounts of intervention here, but then I just go to the charts and I said this, it doesn't change my opinion on the yen at all, right? Like right now, the yen for today looks great. But I said, I don't know a single trader that has called this move and has not been already exposed to the yen. So the only people that are benefiting from this move are people that have been stuck in drawdowns. They're like, finally the yen's going my way.
Yeah, a little bit of a pullback.
Or it's somebody that is chasing day-to-day price action, and they see that right after CPI. If you're looking at a currency strength chart in real time here, you see that after 5 minutes, this yen just bursts to the upside, and then you start scrambling to find a trade. Pound yen's like a go-to because pound yen is your fastest kind of volatile currency pair. So if you go to pound yen, okay, now nobody's calling this move at 208, right? Let's be honest. Like nobody's calling this move at 208. This is a 5-minute candle. But even if you're a trader that saw this move happen in real time, and you're like, okay, is there any follow through here? You take a short, you draw a fib from high to low, you get a little bit of pullback here. I mean, okay, so you fade this move. You have about 150 pips of potential here to get from the close to the low, and you've already pulled back about half that. So if you're not scalping, you're getting nothing out of this trade. Like it's a trade that nobody really saw coming outside of, we knew it could happen, we knew it might happen, but how and when,
There's
nobody
no
knows.
timing. It's so tricky. Yeah.
Right.
Yeah.
And on top of that, if you look at the charts right now, I can go through every yen pair, and I want you to look at just this. This is how simple I'm trying to keep the yen. If you don't have confirmation, like right here, that's the trade that I'd be interested in actually following through on. If the yen's going to be repriced, if there's be this big adjustment with the yen, holding rates steady at, no longer negative interest rates, maybe raising rates by another 10 basis points or something like that, would that be enough to unravel the carry trade? If it is, look out for high volatility, but look out for really clean trendline breaks. Like even though the yen is a pain in the butt to trade, and clearly this year with manipulation, it's very difficult to trade, I do think that the yen will still, when it's all said and done, when it's time to sell it, this thing will just break a trend line and go to the other trend line. Break a trend line.
Exactly.
I mean,
once it moves, it'll really make its move, and it'll be fast and sudden, just like it is today. This is like a taste of what the real thing will look like when that happens. So we will we'll have to see where that goes. Chris, if it's cool, I'm going to leave you for a little bit. I've got a show picking up at 11 o'clock as well, so I'm going to go take a pee break, to be honest, and then I'll be back after that. So you've got it from here for a little bit. Before I step out, guys, if you guys would like to find more information about Chris Pulver, he's got his own YouTube channel and Twitter. It's at Real Chris Pulver on Twitter, or you could find him on YouTube. We'll drop the link to his channel. Chris, you got it for a little bit. Thanks for coming on and taking over the show, man.
All right. Thanks, Nick.
See ya.
All right. Bye-bye. So let's chat some more about these yen crosses. Again, it's pretty wild. It's pretty crazy. I was even looking at like the real-time news, and we tried to find something, and it was kind of opinion-based, like, oh, right after CPI. But I mean, this is your major headline news. Nothing's really changed. Fear and greed index. That's interesting. Fear and greed index. We'll check that out on CNN. I've just got to look up, what's this? A student loan thing. Student loan forgiveness can begin. Yeah, right. Japanese yen. That'll be fun to pay for. Let's go Japanese yen. Not Swiss yen, dude. Go back. I was looking at like BOJ or JPY for any type of news headlines. All right. So, I mean, all they're attaching this to is U.S. inflation miss. It's like, well, the U.S. inflation isn't a miss. It's what we wanted to see, which is lower inflation, which is increasing the probability of the Fed rate cut. What I'm really looking for is manipulation. I'm looking to see, was there some type of intervention? There's clearly some aggressive institutional volume coming into the market on this yen stuff. There could be some unraveling here. Why is that? Because now, maybe the Fed rate cut is looking more real. I know Jerome Powell had a 2-day testimony that he said nothing. If you listen to what he said, you'd think the Fed's not going to do anything and cut rates in September. If you read the Fed Watch tool, it's 80+%. We're probably going to cut rates in September. The market's not stupid. And the market's essentially like, look, dude, we know what's going on. Labor market's softening up. We see unemployment increasing. We're seeing trends, trends to the downside with inflation. Okay, fine. Inflation is also typically lagging. Shelter is lagging. So shelter's been going lower. Rent prices have been going down. The affordability index on houses is still at these terrible levels. But this is what we've been mentioning with the potential, consumer cut, which is if you cut rates, it's just a little bit of a relief for the high borrowing costs. It's a little bit of relief to know that, look, rates are going to start cutting. If you get a cut in September, cut in December, are interest rates different? I jumped on a mortgage calculator and showed, look, here's $1 million home. Okay, where I live out here in Utah, pretty much everything's a freaking $1 million or better. So if I want to buy a house out here, the difference between a 6.9% interest rate and a 4% interest rate makes one house completely unaffordable, and the other one, it's reasonable. It's a bit of a stretch. It's not fun, but man, you're literally saving like $2,000 to $3,000 a month in a mortgage cost just based on an interest rate. So pretty crazy stuff. All right, I've got chart alarm going off here. IWM at 210. Oh my gosh. This is all right. I got to check a couple of things here. So my P&L a day is doing pretty solid. Let me check one thing here. So I do want to look for a roll on Baidu. Let me get a couple of things accomplished here, and then I'll take some requests. We'll take a look at the markets. We'll look at the SPY and the Qs. We'll look at equal weighted. But let me see here. I need to get a couple of these trades rolled out. So I've got my shares at 110. I'm going to do a quick roll. This would be expiration, and also move this out. Okay, so I'm going to go after $1.35 on this roll if I can. Filled at $1.36. Perfect. Hang on a second. Okay. And then here, there's my roll. Okay. No exposure there. And no exposure there. Okay. So I want to double check that I have some Baidu updates. So I just did a roll from 110 to 130, collected $1.25. I just did a, there's no exposure on this one for Baidu. Okay. This one, I did a 110 to 130 for 120. This one, I did a 104 to 125 for $1.70. So I'm rolling up and out, getting lower the cost basis a little bit. This one is a 110 to 130. And then there's no exposure here and no exposure here. Trying to think. I need to get something going on Baidu for some of these trades. So let me check something here on Baidu. And then I just had a chart alarm go off on the IWM. That's another thing I need to look at. So could I do a credit spread here? Let me see what I can get for like a 90. Let's try trade. Get rid of some of these expirations. There we go. All right, so I only have 2 accounts that don't have any exposure here. So one, that one's in. So I've got 3 accounts that don't have exposure on Baidu. So I need to get something in for them. I like the trades. I think if I just did a credit spread here at 90, I'll go out far enough to see if that will pay pretty well. I'm willing to take some ownership and repair the trade. So let me go maybe out 71 days and see what a 90 by 80 looks like. Like the $1.45. I'm willing to widen this out a little bit as well. We have plenty of buying power. This one has buying power. If I bought 100 shares, that's not bad. So I could get, $1.80. That's a wild spread there. So $1.45, $1.73, $1.80. All right, I'm going to do a 90 by 70, collect $1.80. It's income for right now, and I'll play this a couple of different ways. So I'm going to do $1.80 here. See if this will fill me at $1.80. So that's 9732. 9732. Filled at $1.80. Okay. And then this one has ownership, so that one's fine. 9072. And 8051. Okay, so that's one trade, and I'm going to go out to the end of the year. So that's a September, and I'll go to December and do the same type of thing. I'll do the 90 by 80 and collect hopefully 250 on this one. So we got 250 on the same account. So this is a 9732. Filled at 250. 9072. Come on. And 8051. Both of those are working. So let me finesse these a little bit. See how you can fill it at 249. 248. Fill the 248. Okay, and then last one here. 248. Oh, fill the 250. Perfect. Okay, so now I have everyone with some exposure. I need to go to IWM really quickly, and then I'll take some requests. Can I gloss over I saw a pound dollar request from somebody looking at NASDAQs. You think the housing market is really a big concern? I mean, the housing market's definitely a concern when it comes to unaffordability. If you want people to spend, you want people, buying new homes, you want banks to be lending, you want banks to be tying up mortgages, you want more applications. I mean, housing's a big deal. So I think that it's in reality, a 25 basis points cut changes nothing, but you go out 6 to 12 months, the activity that this could spur along is pretty impressive. I mean, based on what we see from the Fed Watch tool, by next September, as far as I can go out, by next September, the rates are looking to be about 3.5%. So if you have a 3.5% official cash rate from the Fed, mortgages are probably looking at like maybe a 5. If it's sub 5, I think that'd be great. If anybody in the next 12 to 24 months is closing sub 5 on new homes, that's great. The problem is you close at sub 5, you're probably getting an appreciation in price by another maybe 5%, 10%, 15%, who knows? Depends on your market. Okay. You're talking about core CPI. Core CPI does not include food and energy because they like to keep it, that's like it's too volatile. It's too volatile to calculate inflation data based on that. Well, as consumers, that affects us on a day-to-day basis. I mean, I'm going to get gas today, and if I get it close to where I live, it's going to be $3.70. If I'm willing to drive 20, 30 minutes, it might be $3.40. So it's it's annoying how much we see gas prices stable and steady, and we don't really see the downside of that too much. Even during COVID, I think, what was the cheapest gas prices when futures oil went to zero? When we were at negative 30 cents in the futures market for oil, I don't remember seeing gas below $2. If it wasn't very long, right? So, all right. I need to spend some time in the IWM. I can do that a little bit later. I'm good on Baidu. I need to recalculate my break evens here. So I will do that after session. Let's talk some currencies. Let's talk some indexes. Here is the SPY on the day. So let me check one thing really quickly. Go to the 5-minute chart. Probably already started to see the price actions support this. Yep. So son of a gun. Well, I need to go to the SPY. Okay, this level is lighting up here around, it's 1,000. I think I was looking at this earlier. I had it pulled up. We just had all sorts of stuff to look at today. Going out to tomorrow, yeah, I had a 565 to the upside. It's dirt cheap now, which I'm not going to take the trade. I'm more interested in maybe seeing some follow through here. Okay, 557 would be about it's about 557 is another $2.50 lower. Let me see what that's trading for. So that'd be a put. 557 puts trading for 77 cents. Can we hit that level tomorrow? Can we hit it today? It's possible we can hit that today. I'm gonna do this out to tomorrow. I'm gonna take a trade here for 77 cents. So a 557 at 78 cents. Let me see if I get, there we go. It's going down a little bit. We'll try it. 78, get it filled. Filled at 78. All right. So I'm in for a long put right there. Right there. So I paid 78 cents for a debit. And if price hits that today, I can tell you roughly what that's going to be trading for. So we're trading at around a 28 delta right now. And if we dropped another $2.50. So 2.50 times the 28 delta. That's another 70 cents on top of the 78 cents. I could probably realistically put in $1.50 credit and close this trade out for profit. If we fall to this level, I'm gonna set it to this. I'm gonna take this trade that I'm in and set here, trade, SPY, close. I'm gonna go ahead and set this at a $2 credit, and that'll be good till canceled. All right, so I'm going to set it at $2. I'll monitor it. If price goes up today and it's trading at $1.40, $1.45, $1.50, mission accomplished. I'll just take the profit and move on. Okay, so I'll set a chart alarm here at 5:57. And then gamma squeeze. Check P&L. And there we go. Okay. All right. So I'm good there. I'll not bore you with my, live trading, which shouldn't be boring. This is what we do. So I need to tackle a couple things in my account. IWM is one of them that I have some trades on. The chart alarm just went off on the IWM at 210. And we are ripping right now, which is pretty exciting. And so I want to try to get out of the way. I think I can do a quick roll on one of my calls, perhaps. So I would like to at least see this before we start taking just full-on requests. But let me check my positions here for IWM. So I'm in IWM. I have a few positions in. Most of it is like ratio spreads, and I'm out of the way. And this thing going up is a good thing for my positions. This one is a 185 is in the money. And I have an August 16th. Let's see, what is this? That is a 185 to 200. I'm going to see if I can roll this really quickly. All right, let me figure this out. So IWM, that's an earnings play. This one I did a roll on. So I did a 200 by 210, and I have a 200 by 212. And that is a calendar spread. So to August 16th, the 200 by 212 right now is trading for 801. And as it stands right now, I would take a small loss on this trade. So what I'm going to look to do, we still have we have a month until this. So the good thing is I have some time left in this trade. If I can roll this 212, I'm going to try to roll this. So right now I could roll it out by another week. I go out further in time. I could roll it to the same strike, get $1 out of this. I could maybe roll this out to September 20th, get $2, roll it up $1, get $1.45. So this would actually let me grab a profit on this trade. I need to give it some more upside. So I think I'm going to do this. I'm going to roll it up to 215, get $1 credit for this sell side. I'm going to see if I can do this for $1. Give me $1. And this gives me a chance to turn that into profit in addition to net profit. So let me see if I can roll this up for $1. Sweet, got filled for $1. All right, so I'm going to try to do that for all the exposure here on the IWM. So this 200 to 212. All I'm looking to do here is roll this 212 up. So quick roll. And then roll this out. Roll this up. So last one I just did, I rolled it to 215. And there's my $1 credit. So I'm doing the same thing here, rolled up for $1. Come on. Filled at 99 cents. All right. So I need about 1 minute to do this. And just double check all my positions, maybe a couple minutes. My 200 by 212. So roll this out. So I will quick roll this out to September 20th. And then roll this to 215 for $1. So here, so the 212, roll this to 215. And there's my September 20th. Try to get 99 cents. 98 cents. Okay, good. Next up, 7634. Same trade there. Roll this out. So roll this up to 215. Roll this out to a credit. All right, I'm going to try to get filled for 95 cents or better on all of these if I can. 96.97, 98.99. Filled at 98. Okay, good. Couple more through the accounts and I'm good. This one, I have the 185 by 225. That's a calendar spread. And I'm long on the 185. I'm selling the 225. That trade cost me $31, and right now it's trading for $31.57. So I'm actually positive by about 40 cents on this trade finally, and hopefully some more upside here. So this one, I don't think I need to roll anything. That is my calendar spread. That is my ratio spread. That is my ratio spread. That one's fine. Okay, so that account's okay. And then this account for the IWM. Here we go. The 185 by 285. That's fine for right now. That was another 31 and change debits, or yeah, we're break even or better on that one. And then this one for IWM is same thing. So, okay, I'm good. The IWM can run. I got some wiggle room for some of the other ones that are a little bit more crafty inside of that. I had to do an adjustment. All right. So I'm good for right now. Metals are ripping. That's a good sign. I'm actually very happy that I did this yesterday. I rolled out of my GLD positions. So I had a 232.50 and a 235 covered call. I rolled out of those and took about 50 to 60% of the profit. I still lowered the cost basis. I also put in some pending orders. So now my GLD, I own the shares around 210 and they're running with no cover. So that's a good thing. Shashi, good question. Here's an easy one. Currency.strength or currency-strength.com. I'll post this in the chat. So you get this one. If you use this indicator, this updates every 5 minutes. So 5 minutes, you'll get a real-time reaction with what the currency strength is reading. So this is a good, I checked this morning and I saw interesting play on the yen. Let me make sure this is real, confirm that with charts. And sure enough, right after CPI, we saw a huge move in the yen. Okay. All right. So GLD is running uncovered, which I'm really happy with. I'm going to do one more thing here in my account. I have to log in, get the old two-step verification. And I'm gonna look to see if I can get a cover on for Baidu. I might be a little bit more aggressive in my personal account because I want to get that margin back. I'm already up. I mean, at this point, I'm probably up around $1,500 to $2,000. And so I might look to protect it and go like in the money. I'll show you that in a second. So this is the code. Let's get logged in and I'll chat with you here. All right. And so as we're talking here, what would you like to see? Let's take a little weather report. Let's go top down. So the SPY is red on the day. Here's the SPY. I'm looking at a 557 put for tomorrow. That's a 1 DTE. In case we just kind of fade this move off of CI news. The Qs. Okay. Wow. That's a decent drop. This is a $6.50 drop on the Qs today. Whew. I'm kind of happy with that because this, like, you know, higher high on the SPY. Let me check something here. SPX. It's 1051. I centered this thing around 5630. This might be a bit of a threat today. Let me check one thing. SPX, it was a 0 DTE trade. So it was about $3. I would probably just close this out for a small loss. I'm going to make an executive decision here and just say I'm going to close it, just because it's so the trade initially was a 295 credit, and right now it's trading for a 425 debit or 410 debit. I would just take the loss and not really worry about it, just in case if this gets worse to the downside, this becomes a much bigger loss. Your max risk on the trade is about $1,500. I'm fine losing $120 as opposed to $1,000. So I'm going to take a small loss at $1.15. So I'm going to note this in my tracker here. So by 1052, calling it directionally a lot of volatility. This is not necessarily what you want to see here. Now it's improving all of a sudden where you're wondering, like, what the heck is this guy talking about? So I was taking a trade this morning with a bear call spread, bull put spread. I need price to stay in the middle. Now, if price stays right where it is, and I centered this around 56.30, I got in for $2.95. So I'm only upside down now about 40 to 50 cents, which is totally manageable. Okay. I'm just going to make an executive decision, say take the small loss. So CPI and volatile day closing at 3.40 to 3.50 for a small loss. And by the end of the day, I'll still track it. I mean, this trade was worth about $45 to hit my profit target. I think that price was volatile enough today that when I centered this morning, we moved very quickly. More than likely, unless price is going to come right back here and stabilize, then it's going to be in profit. But for me to take a small loss early in the morning, it's totally manageable to have a very small loss on the strategy. So I will take the loss today and just say it wasn't great. But at the end of the day, if it proves to be right around the centered price around 56.30 again, then it's two things. It's a winner and it's, net profitable. But because it was a volatile day, I'm just deciding not to do that. And realistically, I'm already short on the SPY looking for that level to fill up. This is what I'm watching. I want to see this level get filled today. I'd love to see this thing. This has been filling up at, 800, 900, 1,000 current net. I want to see this thing fill up and actually drop either today, tomorrow to 557, find that gamma level and, make me a few extra bucks. So you can see at the bottom, my put volume sentiment is 58 to 20. That's a pretty good discrepancy. The bears have the upper hand a little bit today for now. So anyway, short-term stuff there. Okay. So why is the NASDAQ down? I mean, I don't know. I mean, if I knew I had a crystal ball for everything, then we'd put all of our money in the best trade and make a fortune. But the reality is this market is overstretched. I think the market has been pricing in a better than expected inflation news. We had news this week, right? So what's it doing? We're sitting here at these highs. I just keep looking at the technicals. This market is stretched for 12 weeks from a cycle low to a cycle high. There's heavy amounts of profit taking, usually that first or second week in July. And then the midpoint of July is usually flat to down. We go into August. There's usually profit taking in August. There's a September effect coming out of the summer. I mean, if you want a really good run in stocks, usually January to early July is a really consistent run in stocks. August, September is wait and see. And then October to the end of the year is pretty great. I'd actually be curious if there's anybody. I mean, I could probably hit up there's a guy that I follow there named Charlie Bolello. If I could ask him, Charlie's a data guy. He uses Y charts. And if I asked him, hey, just exclude August and September forever in the stock market, I want to see if it outperforms for whatever reason. So I actually might contact him and see if he can do that. Just because if he does, I would be interested to see, like, am I into something? Because you know how there's a saying, sell and may go away. It's not true. Like, sell and may go away. The all-time performance is like 72% if you are participating in the markets from pretty much, I'm trying to think, like sell and may go away is like a May to September window. If you don't participate from May to September, if you exclude trading and you just do like October to April, that has performed to like 72% profit. Okay. But if you included May to September, you're performing at like 71%. So it's pretty much the same. You're not really missing anything. But I'm curious, if you exclude August and September only, those are historically the worst months in the market. August is like everyone's taking their final breaks and summer vacation. School's about to start. Life gets back to normal as we kick off the fall. September is called the September effect because there's a lot of tax loss harvesting, the losses being taken. People are cleaning up the portfolio and concentrating on what's been working, what's not been working, and try to have a good and strong Q4. Okay. Forex Drew says, what is your strategy? Do you have a full video about? Just check out my YouTube channel. There's a bunch of videos. I call them Trading 101. Keep it seriously simple. My YouTube channel is youtube.com/Chris Pulver. You can just search my videos, look at a Trading 101, and there's a bunch of videos. There's probably 60 or 70 videos. And again, look at the subject matter. I talk, support resistance, trend lines, easy confirmations, price patterns, adding to winning trades, managing drawdowns, trading robots. I also have like 4 option videos of just options 101. Check those out on my YouTube channel. So if it's enough to get you started, leave me a comment on those YouTube videos and I'll get back to you. Join my Discord as well. I'm here every single day. And then also with the time that I get to spend with Nick and the team with A1 Trading, I mean, you can find me on the regular. So anyway, all right. SPX going lower. That is good. SPY, hopefully we're coming down towards 557 today. Right now, my 557, by the way, is probably showing some good profit. So the 557 right now is up about 25 cents. So, I mean, it's fine. I mean, I calculated that if we hit 557 today, this should be trading for about $1.40 to $1.50. I might just take the profit today and not worry about it. I might move my stop loss to break even and see if it maintains that level and pushes further tomorrow. It's also if the money's in my hands and it's 100%, I might just take it. What up, dude?
What's up, man? I peed that whole time.
I knew it.
That's how what these live streams do to you, man. You go to pee and then you just pee for like 30 minutes.
Yep. So, pun intended, man. That's why they're called streams.
Yeah, wow. That's eye-opening. I'm doing this for a minute. Never thought of that one. That's good. Gold's up 2% today, man. I'm having a good day. That's the biggest position in my account. So I gotta brag for a second. Dude,
so as soon as you left, I just did some maintenance here. So IWM, I was able to roll IWM and get I have 2 calendar spreads on IWM. So I'm at the 185 long and I had it covered to 225. That's like longer term. And then I did a 200 by 212 that I rolled from May to now to August. And so I just rolled it up and I can turn it into like maybe a $2 net credit. If we continue to go up a little bit higher through the IWM, I'll turn that into like maybe a $2 credit contract. And then my other one will be maybe worth, $5 or $6. So IWM in a big way could help me kind of come out of that little, like, it was just in a hole. It's like I'm trading long-term options, but it's like,
I'm jealous on it because you've got that going on. Frank's got SLYG, which is, I think it's like mid caps. And so you guys are on that trade. I'm looking for it. I'm going to try and see if I can find a way to get in on that, but we'll have to see. Chris, we got another guest who's joining us here today. So I'm going to introduce him and say hello to him. So I'm going to relieve you of your duties here. It's your turn to go pee now. So
I'll do it till tomorrow. How's that?
Yeah, perfect. All right, Chris, thanks for coming on. Again, I mentioned this earlier, but if you guys have not already subscribed to Chris Pulver on his own YouTube channel, we just dropped the link. Boom, bam. Take advantage, free content all over the place. So, Chris, thank you very much for coming on and hosting for a bit.
Yep. Thanks, Nick. Have a good day.
Man, see ya.
See ya.
All right, guys. And we are bringing in a new guest today for the first time ever. It'll be fun to say hello to Diego. We'll be right back. We're going to get that set up in just a second. So stay tuned with us. Diego from South Africa. We'll be speaking with him in just a moment. Stay tuned.
Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
All right, and we are back today with Diego. Hey, Diego, how are you, man?
Good day, Chris. I'm good. Well, Nick, I'm good. Thanks, and self.
Yeah, I'm doing well, and it's good to have you on the show. So Diego, James told me he spoke with you a little bit about coming on the show, which is gonna be a lot of fun just to hear from you. I know you're more on the lower time frame side of things. You are more of a scalper. I wanted to just chat with you for a few minutes and just get your kind of rundown of what you do and what you approach. Which markets do you trade? What time frames do you trade? Give us a little information.
Okay, cool. So first of all, you know what? I have to say thank you, Nick, because I've been watching your content for quite a while, and it's quite amazing seeing that we have as much free content on YouTube. And I do think that this is what the industry need as well. And me, Diego, I am currently trading for 5 years, which I only do consider, 3 years in my journey as my actual trading. And on top of that, my YouTube channel is also turning 3 years old this month. So you know what, Nick, you gave me a nice present.
Awesome. Yeah.
So yeah, me, Diego, I only do trade the Nasdaq, and I only have 2 assets on my watch list, which is basically my DXY and obviously then the Nasdaq. So the DXY is my real-time indicator, which I use just to have some sort of an outlook on what can potentially happen on the Nasdaq. So if we are overall bullish on the Nasdaq, you know what, there's a possibility for the DXY to have the opposite reaction. So they are inverse correlated with one another. And yes, I am a scalp trader, and I am primarily focusing on my lower time frame, such as my 1 minute time frame, 2, 3, 5 minute time frame, etc. And to those who maybe wondered why price found itself having a shift towards the downside, maybe I can also answer that question today. And yeah, I would like to start off by just giving you guys maybe my trading plan on how I am approaching price. Just so that everyone who is on the live stream at least has some sort of an idea where I'm coming from when it comes down to my trading methodology. So yeah, that's it.
Yeah, no, very cool. And again, I think we have a lot of different types of traders that come on. Some people are more day trading focused, some people are more swing trading focused. So it is cool to just hear somebody who is more on the scalping side. Are you you mentioned, how you approach price? You're trading the like the 1 minute and the 5 minute kind of thing. And if so, when you are looking for setups, are you more looking for trends, or are you looking for reversal setups?
Yes, I do follow the trend as well as reversals. It depends on what price is basically presenting to me. So if I do see that I can have my 1-to-2 ratio in, I will take advantage. So if that 1-to-2 ratio is lining up within a correction, whether it is up to the upside or to the downside, I will still take advantage of my trade. If the trade is if my 1-to-2 ratio is lining up with overall trend as well, you know what, I will still find myself taking advantage of that, as long as I do have my ratio in place.
Okay, fair enough. And with your analysis, are you usually going multiple time frames or only the 1 minute chart?
Multiple time frames. I start off from my 4-hourly time frame, having just a higher time frame perspective of what is happening, and from there I will find myself moving down to my lower time frame to just adjust and see what is happening on there.
Sure.
That's correct.
Yeah. By the way, as we speak, I mean, big sell off in the Nasdaq today. There's your 15-minute chart, just a ton of red coming into this. So I guess you'd probably be looking more, or have you been trading at all today?
Yes, I have found myself trading over the course of today. In fact, I also did make like a little video of it, like a content of it, which I will upload later onwards or tomorrow on my channel as well. So yeah, I did find myself taking advantage of price over the course of today.
Very cool. So, Diego, do you have, are you able to share your screen with us so we could maybe get an idea of what your charts are looking like?
Yeah, sure.
All right. Do you see the button? There's that share button right at the bottom of the screen. Okay, you got it. Perfect. Cool.
Yeah. Cool. So, like I made mention, right? If I can maybe just find myself, just giving you the overall outlook of how I am approaching price, right? Just making a few notes. Maybe if I can maybe just hide my charts. So when it comes down to me on a day-to-day basis, I do start off from my 4-hourly time frame, which is basically my higher time frame, right? So if I can maybe just put this as some sort of a trading plan. So for everyone who maybe wants to find themselves also using it, cool. You know what, you can always find yourself back testing it and see if it is working for you at the end of the day as well. Right. So on a day-to-day basis, I will always find myself coming through and have a look at my H4 time frame, H2 time frame, as well as my H1 time frame. Right. So on the H1, H4, H2, H1 time frame, this is basically where I will just look for overall market direction. Right. So basically just following market structure when it comes down to these actual time frame right over here. So I will be looking at market structure, when it comes down to my H4, H2, H1 time frame. So I do have this methodology where I basically look at if my H4 time frame, H2 time frame is bullish in structure, right? I basically mark them off like this. Just something like this. Let's say, for instance, it is bullish. I will mark it off something like that, right? H2 time frame as well. Just do this, maybe like bullish.
Yep. So you're looking at each one individually, trying to get an idea of what the trend is looking like before you make any final decisions.
That's 100% correct. Yes.
Cool.
So I do look at these 3 time frames and just try to determine what overall price action is telling me. So if we have 2 bullish market structure, I most probably would find myself looking for some long opportunities. If we have 2 bearish market structures, you know what, I will most probably find myself looking for some beautiful short opportunities. So to come back to the point which you have made, whether I am trading the corrections or the impulsive moves, right? So if we are, let's say, for instance, inside a bullish market, and I'm seeing that we are, like, for instance, today, right, we were overly extended towards the upside and overall structure was bullish. So what I will then find myself doing, this is where my lower time frame is coming in, right? This is when I will look at areas of liquidity on where we can potentially find ourselves taking out liquidity and then only move down, because mainly I focus on that right there, which is liquidity. So then I will find myself taking advantage of the short, which would basically open up that. But most importantly, H4, H2, H1, I just look at my market structure, and then on my H1 time frame and my 15-minute time frame, this is basically where I would just find myself looking for areas of liquidity. So liquidity areas, I'll find myself looking on my 15-minute time frame and my 1-hourly time frame. So I keep it quite simple. If we have an overall move towards the upside, basically being overly extended towards the upside, I want to see buy side liquidity being taken out, which is above price, to look for some shorts. And if we are moving towards the downside, if we're overly extended towards the downside, I'm basically looking for, you know what, sell side liquidity to be taken out before I will find myself then looking for some beautiful long opportunities, right? And then ultimately on my lower time frame, everything basically smaller than what we have on the 50-minute time frame. This will basically be where I will just have my entry in price. So that
Gotcha.
basically just, so my entry would be right there, right? And then ultimately, and overall, my entry methodology will basically be a pattern which look like this, for some beautiful long opportunities. So many may know it as an actual breaker, right? Also known as just a change in market structure, right? A change in market structure. So if I would have to find myself looking for some long opportunities, first thing I want to look for is my major area of liquidity to be taken out. And my major area of liquidity will basically be everything from my 15-minute time frame upwards, right? So 1 hour really, well, 15-minute upwards is, I think that explains itself as well. And my minor area of liquidities will be everything from my 15-minute downwards. So those are like the in-betweens where I would want to see, you know, what's happening right there. And 9 times out of 10, when it comes down to the minor areas of liquidities, I always look for equal highs and equal lows, because 9 times out of 10, price will find itself magnituding to those relatively equal highs or relatively equal lows price will present, right? So on my minor areas of liquidity, all I just wait for is for price to take out a low, and then wait for price to take out a high, and then I will just simplify myself executing price based off the retest, right? But most importantly, the one thing that I always look out for is this over here, right? Like this correction we have found ourselves creating. It has to be, you know what, 2 or more consecutive candles, right? It shouldn't be just one candle. You can look at one, but that's a whole, I think I would need like an hour to maybe explain that one right there. But ultimately, you know what, we need to see 2 or more bullish candles right over here, right, to confirm that this is an actual breaker, right? And then the complete opposite goes for some shorts as well, right? So all I will be looking out for on my minor areas is the following. Once again, right? I want to see the high being violated, and then I want to see the low being violated. And all I'm going to find myself waiting for is the retest so that I can find myself going short, right? And once again, the exact same thing. I look at this over here, and this over here has to be 2 or more consecutive down close candles, right? Because that right there will basically be my breaker. So now you at least have like some sort of a framework of how it looks like for what I will be looking out for when it comes down to buy or selling price action, right? Now, when it comes down to our entry level and our stop loss areas, right, I like to find myself boxing out this whole area just like this, just like that. Right, like this whole little correction right there. I like to box that out like that and basically place my stops at these lows right over here. I do have like a little rule as well, right? Sometimes you will see that we do have like 10 pips which you can risk, but you know what, if you have like 10 pips, you can always give your trade a little bit of breathing space, make it maybe like 15 pips or 20 pips, and just find yourself targeting a 1-to-2 ratio on what price has, you know what, above or below price. In this case, it will be above price. And that is just a brief explanation of how I am approaching the charts on a day-to-day basis, right? And this over here, the exact same thing when it comes down to our shorts, stops above our swing highs, right? And we are targeting that 1-to-2 ratio just like that. So do we have any questions maybe when it comes down to this before I maybe go into the charts and just try to explain like in the charts as well?
Well, Diego, that was a really good breakdown there. I think that was like super, super well explained. So I love that you were able to just kind of completely draw out with lines and show exactly what you're looking for, multiple time frame approach, and you've really found specifically your charts that you like. So you like looking at the dollar index, you like looking at the NASDAQ, and I think that there's a lot that people who are listening could have taken out of that in terms of like niching down to what you like to trade. Some people like gold, NASDAQ, dollar, crosses, you know, commodities. You can trade all sorts of different things, but really finding your niche is really powerful. So thanks definitely for breaking that down for us and showing it. If you'd like to spend some time going through, you know, your recent trades. I know James had mentioned that you maybe wanted to share a couple recent examples or things like that. Maybe we'll, if you're comfortable with it, maybe just let you go for 10 minutes by yourself and just share your thoughts. And whenever you're ready, we'll jump back in and check back in with you. Is that okay?
Yeah, no, that's perfectly fine. I can find myself explaining like what find itself happening over here as well.
whenever you're done, we'll be listening. We'll hop back in and take over the show again. But feel free. You have the stage for a little bit to share your thoughts, share some examples, and everybody in the audience will be able to learn something here. So you've got it from here for a few minutes.
Okay, thank you, my brother.
Yep.
Let's do it. And my trading session, fam. I see someone asked when is my trading session? New York Open. Okay, New York Open. New York Open. Okay, so if I can, maybe, are you guys cool with me basically using the replay button? Should I use the replay button, or should I just explain like what is basically happening over here? Replay is great. Okay. So let me find myself boxing out the 6 o'clock candle. So if you guys also want to find yourself back testing this, always start off from your 4-hourly time frame and box out the 6 o'clock candle, right? And as you are moving towards the downside, you can just add on, you know what, on your charts, etc. Right? So if we're going to find ourselves looking at our H4 time frame with what price is currently presenting to us, right, we can basically see that on the NASDAQ, we find ourselves having some beautiful higher highs and higher lows we have found ourselves creating, right? So with that being said, we are clearly bullish in structure, right? So like I mentioned, if I can maybe just do this for each and every single one of you, we are bullish in market structure. Okay, so scaling down to my H2 time frame, right? So if I can maybe just play price just one candle forward. Now we do know that we had CPI, right? We had a big news event, and once we have some huge news events, that price tend to find itself stagnating a little bit, right? Consolidating a little bit. So that right there is perfectly fine, right? So we did have some consolidation happening over the course of today, like that, right? But ultimately, what we can see is that price is still somewhat bullish in structure. High, higher high right over there, right? Now, what I like finding myself doing is simply looking at, you know what, if I'm going to get up my Fibonacci from this low to that high right over there, all I want to see price do is move from that actual higher high we have found ourselves creating, which is inside a premium area, to basically come down back into a discounted area, right? And if we're going to find ourselves looking at price currently, we can see that from, you know what, the 100 to the 50%, that right there is considered as our discounted area, right? This area right over there would be considered as our discounted area, and then obviously everything above would be considered as our premium area, right? So ultimately inside the premium area, price is expensive, right? So when price is expensive, you want to find yourself shorting price, right? And when price is inside a discounted area, ultimately you want to find yourself looking for some beautiful, you know what, long opportunities, right? You guys still with me on that one? So clearly we can see that we have a beautiful shift towards the upside. Price created that higher high on the H2 time frame, right? So now let's find ourselves looking at our H1. So H1 time frame, we can literally see the exact same thing as well, right? We are overly extended towards the upside. So I am expecting price to have some sort of a pullback, right? Some sort of a pullback. But if I basically want to see price have some sort of a pullback, right, all I basically want to find myself doing is asking myself, like, is it making sense, right? Because clearly we can see that we are overall bullish in structure, but also something that we need to take into consideration is simply, you know what, we are at a higher high territory, right? So we don't necessarily want to find ourselves buying price when we are at a high, right? So that is also a question you always need to find yourself asking. Is it making sense for you to find yourself looking for some beautiful longs or for some beautiful short opportunities? All right. So scaling down to the 15-minute time frame, right? This is basically where I'm just going to find myself dressing up the charts just a little bit, right? And just look at liquidity over here, right, above price, and then we can find ourselves looking at liquidity below price as well. Okay, so above price, what we can basically see is, you know what, I'm gonna find myself just boxing out my turning points, right? And right over here, we can see that we did have a beautiful turning point right over here, which is coming through as our sell side liquidity, right? And sell side liquidity will always be below price. Okay, it will always be below price. And above price, we will always find ourselves having some buy side liquidity, right? So we are going to look at this little range we have found ourselves creating over here, right? So my buy side liquidity will basically come through right over there as well, right? So ultimately, we would want to see liquidity being violated before looking for some short opportunities, right? Now, this is basically where it comes in, where I made mention on the lower time frame, right? You want to look for some relatively equal lows or relatively equal highs when it comes down to price, right? Because simply price would find itself, wanting to magnitude to those regions right over there. So if I can maybe just scale to my 5-minute time frame over here, right? We can basically see that price did find itself creating some equal highs right over here as well, right? So if I can maybe just box that out like that. And to me personally, you know what? Equal lows and equal highs, those are basically areas that screams out that, you know what, we do have liquidity below or above these actual areas, right? So this over here was some sort of an indication that we can potentially find ourselves having some beautiful long opportunities towards the upside before seeing some downside momentum, right? So if I can maybe just find myself forwarding price for each and every single one of you, this right there was basically the news event we have found ourselves opening up, right, during the CPI. And during CPI, right, well, with the content which I found myself uploading, you will also see that right there, right? But ultimately, we can see that price did find itself taking out our liquidity right over there. So all we're going to find ourselves doing is literally just being patient till the New York open, right? And over here, we will see that this is where we basically have our New York open. All right. So if I can maybe just remove the noise right over there. So one thing that we can see is that, you know what, liquidity has been violated, right? Liquidity has been violated. So the next pull may be back into sell side liquidity, which we are finding ourselves having right over there. But if we're going to find ourselves having an overall shift to the downside, where can we potentially see price head back into, right? So this is also important, not just to have like that 1-to-2 ratio just because, but you know what, you also do have to have a reasoning to why you would want to find yourself or where you would love to see price basically head back into, right? And over here we can basically see that, just like I made mention, that low, lower low, higher high, which we have found ourselves creating over there, right? This whole area is now serving as a breaker right over there, to where price can potentially find itself heading back into, right? Because we can clearly see that once price had found itself having a closure above this up close candle right over there, we haven't came back for a retest, right? We haven't came back for a retest. And that's basically how I'm finding myself looking at magnets, right? When it comes down to magnets, I'm always looking for areas which is untested, because there's a high possibility for price to basically find itself heading to those regions, right? So just like that, we can see that we did find ourselves creating that breaker, closure above, never came back for that retest right over there. Okay, so this is simply where I would then just scale to my lower time frame and just simply wait for my opportunity to find itself opening up, right? Now, I do know that this is most probably a lot, right? I do know that this is most probably a lot, but that there is a whole lot of content which I simply found myself doing some live trading as well, which I also found myself, you know what, explaining everything as well. And yeah, you know, I think that if you would find yourself going through that content, you will definitely, you know what, see it so much more clear. Okay, so all I then just simply find myself waiting for is that one pattern, the one pattern I basically have shown you guys in the beginning, right? So if I want to look for some longs, this is what I wait for, right? So all I wait for is the pullback so that I can find myself going long. Okay, what do? I box out this correction right over there, because ultimately this is where I want to find myself going long from, right? Stops way below our swing lows. Okay, for the opposite, if I want to find myself looking for some beautiful shorts, what will I find myself doing? This is basically what I found myself looking out for as well, right? What are we going to find ourselves doing, or what do we want to see? We want to see our high basically being violated right over there. And then after that, we want to see our low basically being violated, right? Find yourself boxing out your correction, which we have found ourselves creating right over there. All you're going to find yourself doing is wait for price to pull back into your point of interest. And this is basically where you're going to find yourself going short from price, right? Stops way above your swing highs. All right, above your swing highs. So let us scale back down to what we have over here with price action. Okay, so looking at current PA right over here, we can simply see if I can maybe just use my drawing tool for each and every single one of you. Right, check this out. If I maybe can just do that for each and every single one of you, check that out. Right, so clearly we can see that we are having some sort of a closure below, right? But we can see that these wicks which we have found ourselves creating over here was actually the closure, right? What I like to see is a body having a closure below the last down close candle, right? A body. So do we have it just off yet? Not necessarily, right? Right there, we can clearly see that we do have a closure below the body now, right? So if I can maybe just trace up the charts, fam, listen, you can literally go into yesterday's price action, the day before's price action, last week's price action, last month's price action, the month before that, etc., right? And simply find yourself back testing this over here. Okay, so where's our correction? These down close candles, right? Box it out, just like that. Can you guys see it? It may not look as clean as, you know what, if we would find ourselves doing the drawings like this, but ultimately you guys can see that, you know what, this over here is that leg. This correction is that right there, right? Buy side liquidity has been violated. Nice. Sell side liquidity has now been violated. Nice, right? So all we are going to find ourselves doing at this point is simply wait for price to have some sort of a pullback back into this area so that we can find ourselves looking for some beautiful short opportunities, right? So that right there would be it. That right there would be serving as your breaker right over there. Stops at your high, right? Your swing high. And you are simply finding yourself targeting your 1-to-2 ratio. Now, one thing that I love doing, right? If I know that price want to find itself coming all the way down back into this breaker over here, or not that I know, right? But if I'm expecting price to come all the way down back into this breaker, I'm not going to find myself swinging price all the way back down, back into that area right over there, right? I would rather want to find myself catching some small trades on this move towards the downside, right? Because is it guaranteed that price will find itself having that shift towards the downside all the way back to that breaker? You don't know, right? You do not know that. So I like just finding myself catching some small portions when it comes down to price action, right? So with the pullback right over there, you would be triggered inside your actual trade and you would find yourself being short, right? Some back and forth with price. Some back and forth with price, some back and forth with price. And ultimately, you know what, that was the opportunity which found itself happening over the course of today, right? And that right there is basically my trading model in a nutshell. And I hope you guys have like a clear understanding of, you know what I just made mention. Any questions whatsoever? What's your trading channel? All right, Nick, shade that. This.
Hey, Diego. Sounded like you were wrapping up there.
Oh yes, that was my trading model in a nutshell when it comes down to this beautiful pair called the Nasdaq, which I wanted to share with each and every single one of you. And we can see that we had a huge shift to the downside on this beautiful pair.
Yeah, the NASDAQ move was pretty crazy today, but I want to thank you for coming on. I know that all of our viewers enjoy getting to hear new perspectives. I hope you enjoyed your first time on the stream as well. And I think that we'll be seeing more of Diego in the future. We've dropped his YouTube link here in the chat for you guys. Just click that link. You guys can find Diego's YouTube channel where he posts regularly, showing off all of his great analysis and things like that. So Diego, I want to thank you one more time for coming on the show. And I want to thank all you guys for watching today, and we will be back tomorrow.
Thank you, James. Thank you, Nick. Thank you to the chat as well.
Great. Yep. See you guys later. Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.